I'm going to start now. So, yep, I'm going to start now. So, welcome to today's webinar. My name is Joel. I'm the CEO of Integrity Education Group, and today's webinar is really about for people who are thinking to get into the mortgage broking industry and how to build a mortgage broking business from scratch. Basically, it's very much an introductory to, and then take the opportunity to ask your questions as we're going through in the chat box. I'll try to answer them as best I can now, but I will definitely answer all of them in writing after the webinar is finished. So I'm just going to kick off. So, here we go. Oh yeah. So our purpose in Integrity, we also do financial planning, but today we're talking about mortgage broking. So it's really about making a career in mortgage broking simple for people who have the passion. And that's what it's about. It's about why are you coming into mortgage broking? So today is not just about, oh, how do you put the pieces together to build a mortgage broking business. It's also understanding why you want to put the pieces together to build a mortgage broking business. Because at the end of the day, the outcome with mortgage broking is predominantly a self-employed outcome. It's not always. You can get roles in customer service, in processing loans and so forth. But if you're new to industry, it's a lot of people are coming through in a self-employed capacity. How do you do this? Well, it's one of those industries where you can literally create your own future. So as long as you've got the right qualification, access to industry, guidance, and professional support, they're the key kind of foundations you need to really make a go of it if you're passionate about the mortgage broking industry. And Integrity Education, we can help you across all of those areas. Now, obviously, we do the qualification and training side of it, but we also have pathways into industry and can introduce you to people within the industry. Like I said before, if there's any questions, feel free to type them in, or if there's any problems, let us know as well. So, in a very kind of simple overview, there's a kind of 10 steps to building or to becoming a mortgage broker. And I'm just going to kind of quickly overview this, and then I'm going to split them into steps 1 to 6 and 7 to 12. Now, I know it says 10 steps, 12 steps, but 10 steps is where you start writing loans. The other 2 steps, 11 and 12, is when you start to build your business. So it's really important to understand the mechanics and the logistics behind transitioning from wherever you are now into starting your own mortgage broking business and making it a successful one. So first and foremost, the first step is you need to become qualified. So what does that mean? Well, in essence, the minimum qualification for someone to become a mortgage broker is the certificate for finance and mortgage broking. Now, at Integrity, you can do that either online, so self-paced, study anywhere, study anytime, and you have up to 6 months to do the program. You can enroll anytime. It's not semester-based, and you just kind of go through at your own pace. Most people probably take, on average, 16 to 20 weeks, so 4 to 5 months, and that takes into account that they're usually working full-time somewhere else, and they usually have family commitments and so forth. The alternative is you can do the diploma of mortgage broking straight off the bat. However, it's important to understand that the diploma takes twice as long, and in most cases is twice the price. So if you're looking for an affordable and an effective pathway into the industry to test whether it's the right industry for you, then we always recommend, Aisling and myself always recommend, you start with the Cert 4 and then build your way into the industry, and then when you're 6 to 12 months down the track, once you're into your business and really growing it, then look to upgrade to the diploma qualification. Because the diploma qualification, the Cert 4 provides credits towards it, so you don't lose out. You don't have to do 2 qualifications from scratch. You're basically getting credits from the Cert 4, Certificate 4, into the diploma qualification. So let's just have a look at steps 1 to 6 in a little bit more detail to see what's going on. So the initial part of the journey is the initial part of the journey really is making the commitment, saying to yourself, yes, I am serious about becoming a mortgage broker because of these reasons. For some people, it's because they want to control their own destiny. For For other people, it's because they've always had a love of finance. For other people, it's because they love helping ordinary Australians achieve their dream of home ownership. And for many people, it's a combination of all those different things. For some people, they have communities or supporting networks or just networks that they can really tap into, that they've got a ready-made client base that they can maximise the value from. So whatever the reason is, you need to first make that commitment and then decide, right, how am I going to having a certificate for finance and mortgage broking as a first step. I'd actually probably clarify that a bit and say starting your certificate for finance and mortgage broking is the first step. Because whilst you're doing that, you should be then looking at the remaining steps. So what I mean by that is this. As you're studying, and let's say it takes you 4 to 5 months to study, as you're studying those 4 or 5 months, and you're serious and you're going well, and you're talking to Aisling and I and the assessors as you're doing your studies, and you're comfortable with where you're going, that's when you start to think about and planning how you're going to actually transition from where you are now into your own business. So you need to start preparing. So, for example, in step 2, you need to apply for a copy of a federal police report. So again, you just go onto the AFP website, the Australian Federal Police website, you download a checklist. It's I think it might be $40 or $50. It's not a lot of money, but you've got to fill that in, send it off, and get that report back, because that's part of the accreditation process when you join a licensee, when you join a mortgage broking group or an aggregator. So it's always important to start the process and get the stuff ready so that when you finish your qualification, you can hit the ground running. So go and get the federal police check. Might take a couple of weeks for that to come back to you. Whilst you're studying, steps 3, 4, and 5, you can kind of do those together. And what I mean by that is start thinking about step 5. What aggregation group are you going to join? Because when you set up yourself as a Joel Ronke Mortgage Broking Proprietary Limited, I control my own future. It's my own business, but I set up within a mortgage broking group, which are referred to as aggregators, because they have clients, they have the license, and they have the relationship. And that's how we get through to the lenders as a mortgage broker. We use our aggregators. And quite simply, what happens is the money flows from the lender to the aggregator, from the aggregator to the broker. That's how the commissions flow, and that's how the relationship works. You still run your own business, and that's why it's really important whilst you're studying your Cert 4, not at the end, but while you're studying, who you're going to join, which mortgage broking group or aggregator you're going to join. At Integrity Education, we can introduce you to several different groups. We don't have any specific allegiance or alignment with any of them. They're all different. They all have different offerings. They all suit different people. So I always suggest, and Aisling always suggests that, if you're going to speak to an aggregator, speak to 3 or 4. Okay, speak to 3 or 4. Go meet them for coffee. If you can't meet them for coffee, get on the phone to them and just talk through what they offer, how they support you. Support is the most important thing, because it's important to remember you will be a small business owner first, and who offers mortgage broking services. So it's really important to have that kind of shift. I always say anyway to the students, don't think of yourself as a mortgage broker who's in business on their own. Think of yourself as a small business owner who happens to offer mortgage broking services, because that's the key. You've got to be able to run a small business, and you've got to be able to run it in the context of mortgage broking. To do that effectively in this environment and in this kind of day and age, you need to have a really good aggregator behind you, and you need to find one that really supports what you're trying to achieve. So once you decide which aggregator you're most likely going to join when you finish your studies, then whilst you're still studying, that's when you decide which industry body you're going to join as well. So that's step 3. So I've gone from step 5 back to step 3 now. And the reason that you need to join an industry body is quite simple. When you join an aggregator, you need to become accredited with the lenders. Once you're accredited with the lenders, you can write loans. So you can actually offer loans to clients. However, the lenders will only accredit you if you're a member of the FBAA or the MFAA. So that's the Finance Brokers Association of Australia or the Mortgage and Finance Association of Australia. You can be a member of either one. You can be a member of both, but you've got to be a member of at least one. Okay, they're about the same fee, about 400 odd bucks a year. Is one better than the other? I always get asked. They're kind of the same. You just got to ring them, speak to them, see which one you're comfortable with, and join. Okay, that's my only advice there. So once you find your aggregator, work out which industry association you're going to join, and part of that joining the association will be doing step 4, which is the anti-money laundering counter-terrorism finance certificate. So that certificate is part of the induction or joining process with the industry body. So it's just a short little kind of course. It's not even takes a couple of hours type thing. That's it. So if I just recap now, where you're getting to is in step 1, you've started your studies. In step 2, 3, 4, and 5, you've worked out which group you're going to join. You've worked out which association you're going to join, and you're getting all the paperwork together so that you can hit the ground running. So by the end of step 5, that's when you're aiming to complete your certificate 4. So you can see that you haven't wasted 4 or 5 months doing your cert 4 and then doing steps 2 to 5. You actually use the time whilst you're studying to get yourself set up. And I'll explain why that's that's really important in a few more slides. So once you kind of finish your studies, you can then officially join the aggregation group, okay? And at that point, that's when you get your professional indemnity insurance in place. Now, again, at this point, this is where the aggregator will help, and they will organise the professional indemnity insurance for you. And that's part of the conversation you have with the aggregator during steps 2 to 5. In terms of the next step, so once you've decided which aggregator, once you've decided the industry association, once you've got your police check and you've got your money laundering done, and you've got your professional indemnity insurance all sorted out, at that same time, as you're doing all of this, because you've got your Cert 4 and you're ready to go, you find a certified mentor. Now, there's several ways you can do this. My suggestion is you don't just jump on Google and try and find a mentor. It's fraught with danger. Let's just put it that way. What we can do is we can introduce you to mentors that we are comfortable to recommend, or when you are shopping around for an aggregator, one of the questions you ask them is, do you have certified mentors? Will you help me with that process? So that's a really important part, because you need a mentor. You need a mentor for the first 2 years. They don't work in your business. They're not a part owner of your business. You don't work for them. They are literally an industry peer. You can call or email and say, hey, I've got a deal. What do I do? And they literally help you learn the craft over the first 2 years. Someone explained it to me the best way as it's like a marriage. It's like a 2-year marriage. So you kind of, ideally it should be a 2-year marriage, not a 3-month, rolling. You should be with the same mentor from the start to the end of the 2 years, preferably. That's why selecting one's really important. But they should help you grow your business as a practitioner. So once you've got all that lined up, your aggregator will register you with ASIC, the Australian Securities and Investment Commission. That's when you get your Australian credit number, which is just down here. And then the final piece of the puzzle, or the piece of the puzzle that brings it all together, is applying for your lender accreditation and do your software training. So in other words, once you get to this stage, which is step 7 and 8, the aggregator will say, right, they'll set up the lender accreditations for you. Some of them are online. Some of them you have to go into the lender's office. It's a combination of different things. Some of them are a 2-hour presentation from the BDM. Some of them are a 20-minute online quiz. It varies. But once you've got the accreditation, you can then start writing loans in step 10 here, okay? So you've now gone through that journey of certificate 4, finding out who you're going to set your business up with, getting all the paperwork done, getting accredited with the lenders, and you can start writing loans. And in a couple of slides, I'll show what needs to happen as you get into this point. Once you start writing loans, it's going to be hell for leather. You're a new business owner. It's going to be crazy. The first 6 to 9 months, forget it. You're just going to be focusing on your business. As you get toward months 9 to 12 and onwards, you should be looking at doing your diploma of finance and mortgage broking. And to be honest, the industry is moving more towards that way. It's not mandatory. You don't have to have it to get into the industry. You don't even have to have it to stay in the industry, unless a lender requires it or an aggregator requires it. But at this stage, it's not a legal requirement. And then from there, you're off and you're building a successful mortgage broker business. Now, I just want to go into a couple of things. Whoops, can you bring that back? Some of the key components out of that is, so I'm just going to focus on a couple of key components from those 12. Get qualified, get your ticket to the game. I always suggest start with the Cert 4. I'll be honest with you, we make more money out of the diploma, but it's harder and it takes longer. So if you're serious about a career, get into the Cert 4. You can always do the diploma later. Join a mortgage broking group. And this is probably the biggest piece of the puzzle. You know, there's franchise, there's branded, which is kind of the same thing, which I'll go through in a sec, self-branded, or you can come in as a loan writer. So franchise and branded, that's your Aussie Home Loans, your Mortgage Choice, your Money Quest, your Loan Market. It's their brand. You join their group. The benefit of it is you join a business in a box. You've got all the systems, you've got all the marketing, you've got everything there to support you. And if you're new to business and new to industry, I always recommend you look at that option. It depends. I'm not saying you have to go there, but that's if I was doing it, that's where I'd probably be going. Self-branded is literally as it suggests. You know, Joel Ronke, Mortgage Broking Proprietary Limited, it's me. So I set up my website, I set up my branding, I've got to get the graphic designer, I've got to work out my marketing strategy, I've got to do it all, and at the same time try and run a business. So self-branded is really good for people who are coming out of banks or have experience in the finance and broking industry, but not necessarily as a broker. So they might have a network of people they can tap into, they might have a strategy around how they're going to run their business, and they might prefer that self-branded option. One's neither better than the other, it's just a horses for courses. Loan writer is like a subcontracting arrangement whereby we've had several students who come in and they know someone who's got an existing mortgage broking business. They come in and do the course and they basically sit under their friends or colleagues' mortgage broking business as a subcontractor. And they basically just get leads from that business and they write the loans and get splits of the commission. So it's a good way to cut your teeth without the responsibility necessarily of running your own business. As I said to you before, we can help you introduce you to people and groups. Find a mentor. As I said before, that's really important as well. And that's where the mortgage broking group aggregator should be able to add some really good value. And like I said, we've got at least 5 that we can recommend hand on heart without a problem. Join the industry association like we talked about before. You choose between MFAA, FBAA, and then get your lender accreditation and start writing loans. That's what it's all about. But how do you start writing loans? Okay, you've got to get the Cert 4 diploma, your choice. Whilst you're studying, we've been through the 12 steps, you've got to meet the different groups, and importantly, this is the part I haven't touched on yet, you've got to create 2 lists. Well, you don't have to, but I recommend you do. and these 2 lists are quite simple. So as you're studying, as you're going through finding your aggregator, as you're going through getting ready to hit the ground running, create 2 lists. The first list is potential clients. The easiest first list of potential clients is family, friends, colleagues that you know really well. Why? Because when you start doing deals with them or when you start reviewing their circumstances, they won't care if you make mistakes. They won't care if you're fumbling around for paperwork and you don't know how to use this and you don't know how to use that. You use that first list of clients to learn the craft, okay? So that's a really, really important list. The other list is a referral partner list. So if I live in, I don't know, if I live in Pakenham and I want to base my business out there, then I need to start thinking about who might be strategic referral partners in my area for the type of client I'm going for. So I might choose accountants, or I might choose real estate agents, or I might choose financial planners, or I might choose any other kind of group of referral partners that also interact with the clients that I want to write loans for. So you draw up a list whilst you're studying and you start contacting them. Because you can't just rock up when you've got your Cert 4 and go, hi, I'm here, can I write loans for your clients? You've got to build a relationship. So start building that relationship whilst you're studying. And if you draw up a list of 10 or 15 referral partners, you'll probably get 1 or 2 or 3, if you're really lucky, who are willing to build a relationship with you. That's enough to get going. Those 2 lists are critical if you're serious about hitting the ground running. So you don't, because if you don't have those 2 lists, you could spend up to 3, 4, 5 or 6 months without writing a deal. You've got to think very carefully whether you can survive. Also, you've got to start thinking about a simple business plan. It doesn't need to be complex, 1 or 2 pages, just what are you going to do, how are you going to do it. This is whilst you're studying. And this is where you can use assessors as well to really help kind of put some work around this. And just put together a very, very simple 12-month cash flow in the first 12 months. Most likely going to end up nowhere near, but at least you've got some direction. So that you're ready to hit the ground running. That's the key here. In terms of the certificate 4, we've got, we're based in Melbourne, so we do run workshops in Melbourne. The next workshop that we've got is coming up on the 23rd of March, and there's 3 days. So it's the 23rd of March, the 6th of April, and the 4th of May. So it's basically over a 6-week period. You get time off in between, obviously, and that's where you're doing the reading and the study, but you've always got access to our online assessment team. Alternatively, you can study online anytime, anywhere, Australia, at your own pace. That goes for the diploma as well. I just want to come back to here. So I think this is probably the most important. How are we going for time? What's that? Okay, cool. So we're going okay for time. So it's probably a good idea now just to open up. We've got about 10 or 15 minutes left. So if I want to open up for questions, if you can just type questions into the chat box, I'm happy to answer any, whether specifically about what I've just talked about or whether kind of slightly outside the box. Does anyone want to go first? All right, maybe I'll think of a question. What's one of the questions we get a lot?
What kind of assessments you're going to be doing for the course?
Okay, yeah, well, let's touch on assessments, generating leads, and how does the commission work? Because they're usually the 3 types of questions. So with the course and the assessments, it's continual ongoing assessment. So it's not a major exam at the end or a major assignment at the end. It's kind of the workload split over the duration of the course. So as you're going through the different modules, and there's 6 modules, as you're going through the different modules, you're asked to stop and just do some short answer questions. In a couple of the modules, you've got a case study-based scenario where husband and wife, you're given all their details, they've found a property, they want to buy it. You know, how do they come to you for advice around structuring a loan and getting a loan and all that kind of stuff. So that's the other one. Also, the last kind of part of the certificate 4 is a client prospecting module. So how do you go about prospecting for clients? How do you go about building referral relationships with an accountant or a financial planner in this particular case study? In terms of generating leads, it's a really big question we always get asked from people who don't necessarily do our course, people who are doing our course, and people looking to go into the industry. There's no free lunch. That's the reality. You know, depending on the aggregator, some aggregators will sell you leads. Now, those leads that they sell you for whatever price, it could be a flat dollar, it could be a commission split if you do a deal. They're usually not the best of leads. Let's put it that way. From what I gather, from what I've been told, you're better off generating your own leads because you're targeting the people that you want to deal with. That's why those 2 lists here, the first client list and the referral partner list, is so important. The other question we get is, how does the money flow? Because you're running a small business, as I said, so it's all about cash flow and it's all about clients and leads and all that kind of stuff. So when you write a deal for a client, let's say it's a home loan, residential, mum and dad, let's say the loan's $400,000 for ease of argument. So typically it's about 0.6. You get a commission level of about 0.6 these days. So what that means is that when that loan settles, and only when it settles, 1 month later, generally speaking, you will get your payment. Now, in theory, it's $2,400, if I've done my maths correctly, on that particular $400,000 loan. So the $2,400 goes from the lender to the aggregator. That's the first shift of money, right? And then once it gets to the aggregator then pays you whatever amount they've agreed to pay you. So for example, Connective pays 100%. Connective is an aggregator, they pay 100%. So 100% of that, the $2,400 would go to you. But they charge higher monthly fees, flat dollar fees, than other aggregators, whether you're right with business or not. So you've got to kind of work that out as you're talking to your aggregator. Some other aggregators will pay you 90%. So they'll receive the $2,400 from the lender, and then they'll pass on 90% of that to you. And that's your income. And that's how the money flows. And so for the life of that $400,000 loan, the lender will pay the aggregator a trail commission, which is usually about 0.15% of the balance of the loan at each month. And then whatever agreement the aggregator has with you, they pass on that particular amount to you in terms of trail commission. There's a question here. When completing short answer questions in detail, how do you provide support to online students if they are unsure about content and detail? Is it worth paying aggregator more initially? Do they have tier levels? All right, good couple of questions. So let's just tackle the assessment one first. Yes, we've got a team of online assessors. So I'm in the online assessment team. We've got Stuart, who's also in the online assessment team, and we've got Cheryl that helps on the online assessment team. Stuart and Cheryl are actually practicing brokers. I'm not a practicing broker. I, in the past life, was a practicing financial planner, but I've been heavily involved in the mortgage broking industry for about 3 or 4 years. So you've always got access to them via email or via phone. So you can call anytime or you can email anytime. There's no limit. I've had students in the past in various courses who will call or email every day, and that's great because they're trying to learn. So there's no limit on that. Is it worth paying aggregator more initially? Do they have tiered levels? Again, it's a business decision that differs across everyone who's in this webinar today. For some people, the answer is yes. For some people, the answer is no. You've really got to work out what you're trying to do, why you're going into broking, what your client base is going to be like, who you're going to target, and then you take that case study or that you take that business model and you talk to the different aggregators, and you will know very quickly, and they're usually quite honest about this, you will know which suit your business model and which don't. Some people, for example, hate giving away any of the commission and would more happily pay several $100s a month, even if they're not writing business, than give away any commission. Other people are very sensitive to flat dollar fees. So they would rather not pay any flat dollar fees whilst they're not writing any business. And then once they start writing business, the commission starts coming in, the aggregator takes their clip. It's horses for courses. You can move aggregators. They do have different tiered models, and these are the conversations that you need to have with the individual aggregators to ensure your work is checked more for compliance. In terms of compliance, obviously with the Banking Royal Commission and a few other things going around at the moment, compliance is becoming a very, very important part of an aggregator's service. So this is one area that they're really going to step up. Not that they haven't been, but they're really going to make sure that they have programs in place and audit checks in place, especially for the new 6 to 12 month old brokers. So at this stage, you get audited every year, and that will be the case. I think what will happen is that the industry will evolve so that the audits are probably a little bit more robust and become designed to help you improve. They're not designed to penalise you. They're designed to help you improve as a practitioner, because if you improve as a practitioner, then you minimise your risk, which minimises the aggregator's risk. And that's what it's all about.
The mentor has that too.
And the mentor. So the mentor helps you. The mentor helps you with executing compliantly. They're not responsible for your compliance, but they're responsible for helping you learn the craft in an ethical and compliant manner. And that's why my suggestion always around mentors, and these are the only mentors we recommend mentors who are actually mentors. They're not mortgage brokers who are writing 15, 20, $30 million of loans a month and happen to be mentors on the side. They don't have time for mentoring. They're happy to take your money, but they actually don't have time for mentoring. I always suggest that you find a mentor whose business is mentoring. Now, a really good mentor is still a broker. What do I mean by that? It sounds like a contradiction. What I mean is a really good mentor likes to keep their hand in being a broker. So they might write 1 or 2 loans a month, and that's it, just so they can stay in the loop around what's happening in the industry. Everything else is focused around their mentees, and they will have a capped amount of mentees because they can only physically devote themselves to a certain amount. So my recommendation is always find a mentor who runs a mentoring business and who also has experience as a broker. If you decide to go solo, do you need to retain hard copies of files, or is digital storage meet requirements? Good question. And this is a question that you will be answered by your aggregator. So the aggregator sets the framework for what you need to do from a compliance perspective. Some aggregators have really robust systems, and other aggregators may not. So we're moving into an age, or if we're not already there, where digital as much as possible is the best way to go. Now, there's obviously always things that you can't get away from that are paper-based, but in that regards, if you need to keep paper-based things, they'll need to be kept in a certain way. They'll need to be kept in locked filing cabinets. They'll need to be kept in filing cabinets that can only be accessible by certain staff, and so on and so on and so on. So that's the answer to that question. Will the diploma soon be a minimum requirement to be a mortgage broker? Short answer to that is no, it will not soon be a minimum requirement to be a mortgage broker. There is absolutely no discussion at this stage that as an entry point into the industry, the diploma is a requirement. The Royal Commission never touched on it. None of the other ASIC-based inquiries or anything like that have even touched on it. Some of the aggregators are now saying, if you join us, you must have your diploma within 12 months of joining. Okay, so within 12 months, because they know that people need the Cert 4 to come in, Certificate 4 to come in. They know they need to learn on the job before they can really effectively execute on the diploma level qualification. So that's why, in answer to your question, the market's actually moving more to a point of Cert 4 entry, build your life, learn the craft in the first 6 to 12 months, and aim to get your diploma done, or at least enrolled into the diploma within 12 months with a view to having it completed in the second 12 months. It's a really good question, because that's really, really important. Any other questions at this stage, guys? Because we're probably going to have to wrap it up soon. Look, thank you very much for your time. I really, really appreciate you making time at lunchtime. As I said, this is being recorded, so we'll get this out to you. And any other questions, feel free to email through. Happy to answer them individually, or just call on the office. And there's a couple of late questions that have come through, which I'll touch up, or which I'll kind of send written responses to, because we're out of time for this particular webinar. So look, thank you very much, guys. I really appreciate your time, and I'll get it out to you soon. I hope it's been useful, and I'd like to hear your feedback. Email or calls or whatever, to see whether this is something that we might run on a continuous basis. So thank you very much for your time. This is the bit that I